if you do the math on crypto, equities, and bonds, you're talking about 30 trillion of wealth loss, and you got to throw housing in there now. So you're talking about just a colossal wealth destruction on top of the global systemic risk, and that wealth destruction is just from the move in bonds and the move in equities. And so those three things combined are going to force the Fed. The beast in the market is right about to force the Fed out of their policy path agenda.
Harry Dent, Lyn Alden, Raoul Pal, Michael Saylor, Jim Rogers, and Kevin O'Leary are names of some experts that have warned about the disastrous path the global economy is currently charting. Primarily fueled by the continued money printing of the past decade and the food and energy crisis, we are going through one of the biggest financial and economic crises many economies have witnessed in decades, and the U.S. Federal Reserve is in the thick of it all. In a recent interview aired on the Real Vision Finance YouTube channel, Real Vision CEO Raoul Pal and renowned author and CNBC contributor Larry McDonald discussed the current state of the markets and how the Federal Reserve may be crippling global economics and impoverishing emerging economies. Larry McDonald is the founder of the Bear Traps Report, an investment newsletter focused on political and systemic risk from the macro perspective. Like Raoul Pal, he has had a pretty solid career in finance, previously serving as the vice president of distressed debt and convertible securities trading at Lehman Brothers. According to Wikipedia, he was one of the most consistently profitable traders, netting $96 million during his time with the firm. He was also one of the first experts to warn about the subprime mortgage crisis. The New York Times best-selling author has another warning, this time about the impact of the Fed tightening on the financial markets and global economics. We will now take you to the interview as Pal and McDonald discuss the impact of a hawkish Fed on the rest of the world and how it might affect the dollar in the long run. If you like this video, please ensure you give it a thumbs up, subscribe to the channel, and turn on post notifications for more videos like this. You can also drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
It's always fun to pick your brains on what's going on. You've got some big thoughts out there. So give me, to start with, your framing of where we are with the macro right now, because people are all over the map in this. I've never seen people so spread around. It's fascinating times. So where's your kind of base case and how are you thinking this through?
Well, there's no I in team, and I work with a wonderful group of people. So we have a Bloomberg chat with about 650 institutional investors in 30 countries. And what we do is what's called mosaic research or application. So we'll talk about ideas during the day. It's like a live ideas dinner with the institutions, a lot of hedge funds, mutual funds, pension funds. And then we triangulate the conversation and figure out where we are relative to where we were months ago. And the feeling I get over the last 2 weeks is so much like Lehman or just before COVID, in the sense that the move we've had in rates, oil, and copper only have happened before spectacular credit events. And it's amazing how those three, and you've always said it with the years, those are the big three. But if you look at the global banking system, what's happening in Europe, what's happening in emerging markets, I think over the last 10 days, at least 7 finance ministers have called either the Treasury Department of the United States of America or the Fed. There's just tremendous pain there. And then the banking system in Europe is buckling. And at the same time, in the United States, if you do the math on crypto, equities, and bonds, you're talking about 30 trillion of wealth loss.
I've got a very similar view to you. I think we've had, if we include the dollar, commodities, and rates and the rate of change of those, probably the largest, fastest tightening in history. And to me, my forward-looking indicators make it look like economic growth is about to be pushed off a cliff. I've been using 1974 as a good guide, where the ISM went from 56 to 30 in 4 months. And that's the kind of magnitude of what I've got in front of me. I don't think it'll be as fast, but I think it's fast, which is kind of what you're picking up. Is what you're saying is, just to interpret it for people, is what you're saying is the reason these other central banks are calling the Fed and Janet Yellen is because there ain't dollars around, because the Fed is sucking liquidity out of the market, and suddenly all of the global borrowers are like, where's our dollars?
you can get for a 6-month treasury, you can get the same as you can get with a 10-year now. So this 6-month, 10-year is nearly inverted, which is great. I mean, that's classic recession, and we'll be 3 months inverted. But you're right. If you're an emerging market country, the evil thing that nobody's talking about, this is a Fed that has been talking about inequality and for a long time. And what they're doing is they're exporting inflation to very poor countries because, as you described, when the dollar goes up, it's really all those other countries are buying oil, gas, food in dollars. And if you want to go to Chile right now or Argentina or Colombia, you can have the best vacation you've had in decades because the currencies have been so penalized. And imagine being a truck driver in Chile or Brazil or Argentina. And your costs of running a business is just because the currency's gone against you and oil's gone against you. It's just putting people in the streets. And that's another reason why the finance ministers are on the phone to Mr. Powell.
During a discussion, Raoul Pal and Larry McDonald also speak about how the Federal Reserve might be intentionally causing a currency crisis for the rest of the world. Much like what Russia is doing with its energy resources in retaliation against the sanctions, Pal believes the Fed is going to create swap lines, whereas other countries follow its orders in exchange for the dollar. Though the United States and the dollar might have the upper hand now, Pal thinks this will change soon, which would have drastic effects on the U.S. economy and the global order.
There's a theory going around that I have some sympathy for, that after the Russian situation, the Federal Reserve and the US government essentially are going to use swap lines as a weapon. We will give you dollars, but in exchange, you need to do what we say. How are you thinking through that? Because they're creating a currency crisis here. It's kind of, if we're not careful and the dollar has another 10% higher spike, I mean, we're going to create a enormous global mess. We'll come onto the banking system in a bit, but just at country level, we've got some huge problems coming if we carry on like this.
And you know what's crazy? One of the things I talked about in my book were these swap lines. I wrote this pretty famous book about Lehman Brothers. It's now, what I'm really proud of, it's in the top 20 all-time at the CFA Institute, and it's called The Colossal Failure of Common Sense. But during the Lehman crisis, they really started to experiment with these swap lines to Europe. And then during the COVID crisis, they started experimenting the swap lines to emerging markets. And to your point, and I read your posts, and I obviously watch Real Vision. You've been making this point that the amount of trade in dollars, the dollar is such a wrecking ball that the Fed is becoming the planet's central bank. And there's just so many people depend on dollars, and they're going to have to open up those swap lines again more aggressively to contain this serpent, this beast inside.
But politically, I think they're going to be a little more cautious. I mean, do they want to give swap lines to China? No.
No.
But they might go to a Southeast Asian country like Sri Lanka, let's say, who's got a real nightmare, and say, we can help you a bit, but we're going to expect you to toe the US line on global affairs and not the Chinese line. Because we've seen that kind of with Russia using reserves as warfare. I kind of feel like that might be around here.
That's fascinating because the U.S. has been doing that with sanctions. Yeah, I think I think now I see where you're going. That's a great sniffer. That is the future. Whereas I don't want to say extortion, but you could politically, if you have a motive and you make the call the right way, a little nudge, you could definitely inflict some political power by those swap lines. Whereas in the past, Lehman and COVID, there was no politics around. And so the propensity to use politics around swap lines is probably exploding right about now.
So what I'm starting to think through is how similar this could be to 84, 85, where the dollar gets out of control, everybody's scrambling for dollars, playing a game of musical chairs where the Fed keeps taking away a chair, and the dollar goes much higher. So, okay, fine, you have an emerging market crisis, but I'm worried it's also going to play into that polarization that's already going on, where China says, we don't want the dollar, enough's enough, because the dollar's not actually 87% of world trade, but 87% of world trade is denominated in dollars. So the dollar's China's problem now. And it's the same for India, it's the same for Brazil, it's the same for Russia. And if we're not careful, the dollar's demise could be caused by the strength of the dollar, which has always been my my base case that if we go up too much, people are going to have to walk away from the dollar.
As Raoul Pal has stated, the world is becoming increasingly aware of and wary of the dollar's position in global trade. For at least the past decade, countries like Russia, China, and Brazil have been making some silent moves to cut down the dollar's dominance. But those moves are no longer silent. As Larry McDonald notes during the discussion, the United States used to contribute much more than it is doing now to the global economy. It might be happening slowly, but the petrodollar system is gradually ending and contenders like the yuan are really getting the world's attention. What do you think about Raoul Pal and Larry McDonald's discussion? Please drop your comments and observations in the comments section below. Also, ensure you hit the like button and subscribe for more videos like this. Thanks for watching.